One Up on Wall Street by Peter Lynch. Peter Lynch's One Up on Wall Street is not the story of Wall Street's elite. It is the story of the ordinary investor who learned to see what others missed. As the legendary manager of Fidelity's Magellan Fund, Lynch turned $20 million into over $14 billion, not through luck or secret information, but through observation, patience, and common sense. In a world obsessed with financial jargon and complicated formulas, Lynch brought investing back to its roots to simplicity, curiosity, and discipline. He believed the average investor could outperform the professionals because ordinary people saw real trends before Wall Street did. His philosophy began with a simple truth: invest in what you know. Every day, people walk past. Opportunities, the stores they shop in, the brands they love, the products they trust. While analysts studied numbers in offices, Lynch found clues in shopping malls and parking lots. He urged investors to look around, to notice what was growing, what people were buying, and which businesses were quietly winning. For Lynch, the stock market wasn't a casino. It was a living mirror of human behavior. Companies with real products, real profits, and strong growth would eventually be rewarded. If you like the store, he'd say, chances are you'll love the stock. But his genius lay not in enthusiasm, but in analysis. Behind every great story, he demanded numbers: earnings growth, manageable debt, strong cash flow, and sustainable business models. He believed in facts over feelings. Lynch divided companies into 6 categories: slow growers, stalwarts, fast growers, cyclicals, turnarounds, and asset plays. Each required a different mindset. Fast growers could multiply wealth if held through expansion. Turnarounds could deliver miracles if chosen carefully. His advice was simple, yet profound. Know what you own and why you own it. He warned against chasing hot tips or short-term trends. Never invest in anything you can't illustrate with a crayon, he joked. Meaning, if you can't explain how a business makes money, don't buy it. To Lynch, investing was not about timing the market, but time in the market. The key to making money in stocks, he said, is not to get scared out of them. Successful investors stayed calm during crashes because they trusted their research and the strength of the companies they owned. He believed the greatest advantage of individual investors was freedom. They didn't have to answer to bosses, boards, or quarterly performance reviews. They could think long-term, act decisively, and ignore the noise. The market, Lynch said, is filled with people who know the price of everything, but the value of nothing. He taught the power of the 10-bagger to a stock that increases tenfold in value. Every portfolio, he said, only needed 1 or 2 of these to change an investor's life. But to find them, one needed patience, courage, and the ability to ignore the herd. The biggest profits often came from buying when others were fearful and holding when others doubted. Yet, Lynch also warned humility was essential. In this business, he said, if you're good, you're right 6 times out of 10. Mistakes were inevitable. The goal wasn't perfection, but resilience. Learning from failure, and staying in the game. As his fund grew, Lynch never lost touch with his philosophy. Even managing billions, he continued visiting stores, reading reports, and talking to ordinary people. He believed insight came not from Wall Street towers, but from Main Street conversations. His legacy was not just financial success, but empowerment. He gave everyday people permission to believe they could invest intelligently. That intuition, backed by discipline, could outperform complexity. Stocks aren't lottery tickets, he said. Behind every share is a company, and behind every company is a story. In the end, Peter Lynch proved that investing is less about prediction and more about perspective. The intelligent investor doesn't chase, they observe. They wait. They understand that the market rewards patience, research, and courage. He left behind one timeless message: know what you own and why you own it. The simpler you keep it, the better your results.